This episode of Blockchain 360 is only made possible by listeners like you. If you listen to this show on your Apple podcast app, remember to give us a review. Every review helps more people find the show and join our amazing community. For more information about this episode or for easy access to related programming, visit our website at blockchain360.co and subscribe to our free email list. Enjoy this episode.
This is the Blockchain 360 podcast. Blockchain 360 is a podcast of interviews and discussions about the current state and direction of blockchain. Thank you for joining us today. If this is your first time listening, then thank you for coming. The Blockchain 360 podcast is produced weekly for your enjoyment, and show notes are found at our website, blockchain360.co. Come back often and feel free to add the podcast to your favorite RSS feed or iTunes. You can also follow us on Twitter at Blockchain360. All links discussed today are included in the show notes.
My name is Brian Nielsen, and I am your host here on the Blockchain 360 podcast. My guest today is Sinjin Jung. And after extensive corporate and startup experience in fintech, gaming, and infrastructure throughout East Asia and Southeast Asia, Sinjin founded the International Blockchain Monetary Reserve, the issuer of ARRC, or ARC, for social impact and promoting financial inclusion through a decentralized economic system. Sinjin, as a former vice chairman, founded one of the leading fintech firms in the Philippines, True Money Philippines, licensed under the Central Bank of the Philippines, which is part of the largest fintech network in Southeast Asia, True Money. He has been a chief strategist and negotiator for over 6 years in Southeast Asia for infrastructure and gaming projects with a focus on regulation and operational setup. He was the regional director of Asia for PokerStars, the world's largest online poker game company, and was the primary marketing and regulatory force for the game's introduction across the whole of Asia. His professional background includes being a former senior management consultant at PricewaterhouseCoopers in Korea and a Korean government senior industry technological analyst. He has his MA in international business from Korea University and is a Harvard Kennedy School EE alumna in the field of economic development. Sinjin, welcome to the Blockchain 360.
Thank you, Brian. Thanks for having me here.
So let's start with a little bit about your background outside of this. You started this incredible program here called the International Blockchain Monetary Reserve. Well, before we get to that, what got you into blockchain originally?
Well, actually being in fintech and payments, before it was even called like fintech, I was aware of like Bitcoin way back in 2010. I remember getting forwarded the white paper from someone, and I didn't really think much about it. I mean, we were very pragmatic at the time in terms of like looking for whatever payment solutions we could find. But fast forward to May 2017, I'm driving and a friend of mine calls me from Hong Kong and he says, Sinjin, can you help me negotiate some terms? A Hong Kong investment bank, mid-sized one, wants to open a crypto desk. And I was like, what are you talking about? And then he proceeded to tell me that Bitcoin and crypto has been blowing up in the last few months. And, he had changed, he had day traded from 80,000 to like almost $1 million US in those few months. And I was blown away. And I said, okay, well, let me get some more information. And the biggest thing was that at this time, I already exited with the sale of that fintech company to a consortium with CP Group and Alibaba, actually, almost a couple years back. And I was basically taking some time off. And then I kind of fell down the rabbit hole as I learned more. And I spent, I think, 2 weeks trying to figure out what decentralization meant. But once I kind of figured that out and my friends had introduced me to some other people, to kind of give me an overview and an understanding. I mean, it just kind of blew my mind. And a lot of things that I had been thinking about during undergraduate and graduate school before I had started business. And I think a lot of solutions that I saw or problems that I saw when I was doing business in Southeast Asia, it seemed like this was a solution. And then basically from then on, I had spent the next year and a half researching and studying and just learning about the possibilities, and ended up with this project. And my white paper ended up being 141 pages long, and it's almost like a PhD dissertation more than anything else. But it just completely engulfed me. And I think the biggest difference between myself and a lot of other people in this space is that I come from a very experienced strategic background. So for me, it's all about strategy, management, building up companies, operations. I'm not a technologist, although I've been in the technology field for almost my entire career. It's always been on the commercial strategic side of things, the management. So, I can tell you about technology, what its function, where it, lies, positions in terms of its competitive functions, how long it's going to be competitive for, all these things. But, am I a coder? Have I coded? I've tried to code. It's just not my thing. But it's kind of embarrassing thing. I mean, like nowadays, if you can't code, it's kind of like a mark against you. And so I've tried. It's not my forte. I'm in my mid 40s right now as well. So, um, so the take that I took was really a more macroeconomic, monetary policy kind of point of view. And I ended up reading all these books. I went back to my old textbooks on my macroeconomics and monetary policy and economic development. And for me, learning and relearning about even monetary policy and the Fed and stuff like that was amazing, because for the first time as a strategist, looking at what you can manipulate in terms of cryptocurrencies or Bitcoin, or this idea of a sovereign currency that wasn't tied to a nation state. It just opened up this entire field for me. Whereas before, like when you're in business or you're doing strategy, whatever the macroeconomic trends are, whatever the federal monetary policy is, that's it. You just kind of accept it. They raise interest rates. You figure out what to do. But for the first time, being able to strategically look at and even manipulate, well, if you had this currency or you had this economy and it had this decentralized economy, like what are the implications? And so that was it. And the biggest passion I've always had is, I think, taking on the biggest challenges and figuring things out. And I guess the biggest passion has been more on not particularly business, but I guess the human condition and solving issues that I think are society wide. I'm just that kind of. I think that's why I ended up in business strategy, because I really like that kind of long term kind of outlook and figuring things at that scale. So that's a mouthful, but
Yeah, that is.
it just,
Well,
yeah, it
you
just totally overwhelmed me.
no, that's that's common though with a lot of people. What I find a little bit interesting about your background is that you were the lead investment management strategist for a family office, and part of that role is it took you into the creation of your true money
Yep.
concept. So explain to us a little bit about what you were doing as that strategist, and then how did that transition into the true money project that you actually had, and then I guess you sold it to Alibaba.
Yep. So, so I was working for a very prominent family office in the Philippines for 2012 to 2016-ish, 17. And we ended up having our exit in around 2016 over a course of a couple of years, right? It was structured that way. And getting into fintech, um, basically the biggest thing that happens in the Philippines is remittances. I mean, everyone talks about it. It's kind of like this massive um, golden goose, revenue stream, cash cow, where you have, billions of dollars literally coming back into the Philippines every year from overseas workers who are remitting back to the Philippines. But that also happens within the country itself. So you have Manila, which is part of the national capital region. And then there are people who are coming in from the provinces. And Manila and Philippines itself is like it's an island nation. It's like over 1,000, or I don't even know. I think it's like over like 10,000 islands or something incredible like that. And so it's very geographically diverse, spaced out. There's different dialects still, um, And people come to Manila or Cebu to basically work, right? And then they send money and they remit it even back home to their own provinces. And so we had getting that experience to basically set up one of the first kind of domestic e-wallet payment solutions and aggregators. We looked at it and we were aggregating payments like bill pay and so on and so forth for like electricity, so on and so forth. Because like what's been happening is that in the Philippines, still a lot of things are quite manual. And so if you want to pay a bill, you literally are still standing in line to pay the bill. Um, and so we thought, okay, great. Well, if we have this kind of like portal where people can just basically come in, hold a e-balance, and then just pay down from there, that's great. And then also, once we start to get enough people on both sides of kind of a remittance corridor, that's what we would call it, then we can start getting, the transactions fee there. But the scale to really penetrate the market, it was, you have a population of like maybe like 106 million people in the Philippines. Um, and the population density is huge. And then it's very geographically spaced out and sparse between locations. So there were so many logistical issues, and also simply the cost of acquisition per person was quite high because there are a lot of legacy type of analog substitutes in the Philippines. There is like, Western Union, uh, pawn shops are everywhere in the Philippines. Like
Wow.
you wouldn't think about that, but like, it's literally like everywhere. It's like the US in like the 1930s, right? Where, you'd have these local pawn shops in like neighborhoods, and, they would, be able to hold your watch or whatever like that, and then, give a payback. But that's very normal in the Philippines, and these pawn shops are probably the major domestic remitters within the country. And then you have like WorldPay and all these other international brands that are there as well, who are having representative offices as well. So you had all these legacy types of analog payment centers, and they're actually doing well because in actuality, Philippines was really the way to penetrate the market isn't on a technology front; it's still on an agent basis front, agent basis front, like basically an agent with another agent and a sub agent and so on and so forth to get that
Right.
distribution done. So there's a lot of trust because it's a lot of cash that's being moved around, and then the cash basically can either be loaded on to cell phone minutes, and then those being transferred as well. Like so, there's so many different actually avenues. And we had thought like, okay, if we had this single platform, it would be far more convenient for people. But still, the onboarding of people was quite difficult. And even if you were to be onboarded, even if you were to deposit there, the in some areas where in the Philippines as well, there's two major fast food chains. One is McDonald's, but the other is called Jollibee, and Jollibee is their local fast food McDonald's equivalent, which is actually, I believe, more popular than McDonald's in the Philippines.
Wow.
And there's kind of and there's like hundreds of thousands of or tens of thousands of Jollibees across the Philippines. But it's interesting to know that when you go to the Philippines and you're in the provincial areas, wherever the last Jollibee is usually where the last bank is, right? And so if there's a no Jollibee in your village, there's probably not a bank there either. So people will have to
Interesting.
come in like 20 miles or 10 miles to come in, even pick up those remittances. And so it's very important that you have agents who are in those villages as well, who make the weekly trek, and who are actually um, you know aggregating payments on a weekly basis or 3 days, and then they go back and forth and so on and so forth. So it was very manual, and so it was hard to get traction. And what was needed was basically scale. And I think fintech and any of these kind of remittance projects, when you're talking about like locally, they need a lot of scale. When you're talking about international remittance, um, you need scale, but in a different way. Like you need scale, like if you're remitting from Canada or United States or Hong Kong, you need to have remittance offices there, and then you also need remittance offices back in the Philippines. And the Philippines has been remitting back into the country since the basically the late 70s, early 80s, right? A lot
Right.
of people they don't know this, but in the 1970s, the Philippines was one of the most successful Asian countries by far. In the 1970s, the Philippines was 5 times larger in economy than South Korea. if you
Wow.
can believe that.
No, I
Yeah.
can't. That's
Yeah, so
huge.
if yeah, it's humongous. Like there is a school in the Philippines. It's a management school called the Asian Institute of Management, and if you look at a lot of government agencies like the Asian Development Bank or um, a lot of U.S. based aid agencies, their national headquarters or their regional headquarters is in the Philippines because at the time when they were established back in the 1970s, Philippines was like Hawaii of Asia, basically. Like if you see old footage from that region, when the population was a lot lower and the infrastructure was there and so on and so forth, it looks like Hawaii, right?
Wow.
But the way the political, I guess, environment evolves past the 70s, and the amount of, like, to be honest, corruption and the way things have been set up, Filipinos ended up working abroad more and more. And so what's common knowledge in certain industries are like cruise ships, and even in the architecture industry, Filipinos are actually super, super highly regarded, like Filipinos from Philippines, because there's so many of them in these industries that they've made a name for themselves, how capable they are.
Right.
But so Philippines, like I mean, remittance in these regions has been going on for a long, 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 long time. So in order to disrupt it, I mean, it's just a lot of capital investment, and this is why when first CP Group under Ascended, CP Group is the largest conglomerate in Thailand. To give you an idea how big they are, because they're a B2B company, so a lot of people don't really know too much about CP Group.
Right. They don't have
They're
public
30
awareness, but they're still massive.
they're 30% bigger than Samsung Electronics. That's how
Wow.
big they are.
That's
Yeah,
huge.
it's huge. So their major competitor is actually a company called Cargill in the United States. Are you aware of Cargill?
Of course I am. Yeah.
Okay, a lot of people aren't because they're B2B, right? They're like, but they are the largest private company in the United States for like the last, whatever, 20, 30, 40 years,
Right.
and one of the largest food producers. It's something like said like 1 in 3 times that you touch food, Cargill has had a like place in it. And the main competitor for Cargill internationally is the CP Group. And so a
Wow.
branch of theirs is Ascend Group, yep, which handles their new technology, and they own all the 7-Elevens in Thailand, which is like over like 2,000 7-Elevens and so on and so forth. I mean, they're a major player, and so they have a brand called True. And so when you go to Thailand, you'll see like True Telecom, True Vision, True HBO, so on and so forth. Like they basically a massive conglomerate. So they decided that they wanted to get into payments as well because they were doing very well in their own country. And so they came around, and then we decided it would be a really great fit for us to work together. And so we actually started as a partnership with them first, and to build out the market, because we realized we needed just so much capital and support to really make this work. And then later that year, and Financial Alibaba had actually bought into the Ascend Group for specifically payments
Right.
and fintech. And they had taken 20, possibly 40, I'm not sure what the percentage is now, but they had taken a board seat as well, and also did a joint investment in with under for the True Money brand. And when they came in, things started to ramp up very, very, very quickly. I think Ant Financial also wanted to IPO later that year. They didn't IPO actually, but that was the kind of plan 3 years ago. And so they were very, very aggressive. And so we went from a company of 36 people that I was managing to 1,500 in less than a year and a half,
Wow.
right? Yeah. But even with all those people, and we had a massive budget. I don't know if I really can say how big it was, but it was 8 figures, so it's a
Yeah.
lot of money, US
It's a
dollars,
lot of
right?
money.
Yeah. And we basically, with the 1,500 staff, we were engaged with 100,000 agents in the Philippines, right?
A
By the time
hundred
I had left.
thousand.
Yeah, 100,000. But even with 100,000, we were just basically starting to really penetrate the market. We had full market coverage, but still we were just starting to penetrate at that point. But what this taught me, And what I learned from my experience and my exit was, I've been around fintech before it was called fintech, before you were talking about banking the unbanked, before even people were talking about really financial inclusion. And, I look at these words more like buzzwords that fintech has used to kind of justify why they're kind of targeting these microtransactions and these emerging markets and so on and so forth.
Exactly. Yeah.
Yeah, and this is kind of a real play off the entire microfinance and microcredit, microloans, and stuff like that, and kind of the next evolution where fintech comes in and saves the day. But the reality is, from what I saw, like the real effect of it wasn't really financial inclusion or so on and so forth. It was a race to try to digitize and kind of monetize a population which was not getting monetized enough. And in some ways, if you think about it, um, when people look at people who are basically in these emerging markets and they're not part of there's no middle class, and a lot of times in these markets, and they're basically living in a fairly like really low income life. um, the things that they buy in terms of like shampoo and soap and different luxuries, what they call it is like they're called packets. So like let's say instead of buying like an ounce of something, you would just buy like literally a packet of it. But even though it's a smaller amount, let's say detergent, instead of buying a whole box, you would buy just like a packet of detergent for like one load,
Sure.
right? Or two loads, right? But the pricing of that is as expensive or even more expensive than if you bought the whole
Exactly.
box,
Right.
right? And so like it's introducing consumerism or these goods to these individuals, but they're really not getting any further discount. They're just getting access to something in actuality looks like something they can afford, but really they can't afford it actually,
Right.
right?
Right.
And so a lot of times when you're talking about financial inclusion and you're trying to say, let's give these people bank accounts. Well, if a bank account has um, interest on that bank account or a fee, like let's say you don't keep a minimum balance and so they take money out, or if you use the ATM and you have to pay $2 and their weekly income is $20 or $50, at $20 of weekly income, $2 is 10% of their weekly income
Right.
just to use the ATM. Yeah. And so like you're bringing people in who basically aren't fit for the kind of existing system. In actuality, the existing system never made them fit at all. But because you're making it micro, somehow like this is okay and this is good, when it's actually simply, I believe, and I've come to understand that it doesn't really have a positive effect. It's just creating more accessibility, yes, but for what end? I think it's further pressure, and it's creating this illusion that there is progress when in fact in actuality it's not. It's not dealing with the root issues at all. And then with that and that exit, I basically had been working nonstop from my days in as a management consultant all the way to my time in Macau and then the Philippines and also in China. And I wanted to take a break. And my family, we moved to Canada for a little bit because my father was ill, and I have two boys. They're 8 and 10, and I wanted them to really get to know their grandfather before he passed on. And then I wanted to take a break. But in May of 2017, I was driving along, and I believe we were driving to Boston at that time. My friend called me out of the blue and asked me for that advice, and then all the kind of experience that I had up to that point with fintech and everything else like that, I just realized if you could actually have a decentralized solution, then you could create a different system that wasn't based on the tenets and the regulations and the requirements of the centralized system, and it could work. You know, I think a lot of people, when they look at centralization, they think it's all bad, especially in the crypto side. But centralization was there necessary because when you had decentralization without a network, it was chaos,
Right.
right?
Right.
So centralization brings, rule of law, it brings a direction, it brings leadership, and that's great. But what if the leadership and the direction and the institutions formed now basically are exclusive? Then what can you do to really change that? But if the entire business model or the entire way the economy works is exclusive, to, the lower income, there's no way to really change that.
Right.
The onus is upon the lower income to kind of match up into that. But when you have a decentralized, network, finally the possibility was that, wow, we could create our own economy that could be self-sufficient based on a network, and that, what do you call it? We could make something that kind of just exists without having to worry about what the central system is kind of enacting.
Sure.
And I take a little bit different view on this as well, is that I think a lot of people in the space, especially the technologists, but I come from a strategic point of view, is that technology is like either you're centralized or you're decentralized. It's like no kind of in between. And for me, I feel like, well, that's a little bit, if I can be so bold to say, because I think I'll get a lot of haters if I say it, that's a little naive, because the reality is, yes, Bitcoin, I love Bitcoin. I have a lot of Bitcoin, not that much, and it's all with a custodian. So nobody, please come and try to rob me because you can't get it. I don't even have like the codes or anything like that. All right, sorry, the keys or whatever. But like, you need hardware to mine it. You need electricity. You need the internet, and these are all secured by rule of law in all these countries, which are all centralized authorities, right?
Right.
I mean, that's just the nature of it. But so the way I see it is, but that doesn't take away from the decentralized nature of Bitcoin, not at all, right? I think one like really telling example of that is that you have I believe the Congress sending a letter to Facebook saying, you got to shut down the development of Libra. And I think one very prominent Bitcoin, I don't know what you would say, but I guess media source is, Pomp. I just know him by his Twitter handle. Anyways, he ended up tweeting back. He said, well, you can't send a letter to anyone in Bitcoin to shut it down.
Right. There is no one.
Right. And so, so that's great. And I love that aspect of it. But from a strategic point of view, I think that what's the greatest strength of a decentralized network is that in a centralized network where there are, if we say, nodes that are excluded or cannot really participate directly in a centralized network, then they can participate in a decentralized network. And in a decentralized network, it almost acts like a superstructure above a centralized network where they're excluded on the centralized network level, but on a decentralized level, they could actually acquire wealth or progress their own economy. And if they are able to achieve, a success in a decentralized network, they could end up coming back into a centralized network or vice versa. I think it's hard to kind of articulate, but I almost think, though, that having a fully decentralized network is almost the missing equation to structuring economy as a whole, where centralization will always create exclusion,
Right.
but a decentralized solution could solve that particular exclusion that a centralized economy does, and then make people strong enough to engage in the centralized economy if they wanted to.
How does that bring you to then the International Blockchain Monetary Reserve and its product, ARCA, which stands
Or
for
ARCC.
right. So it stands for the Asian Reserve Currency Coin. So you've given me a wonderful background of
Yeah.
the scenario, the situation, the global need, and so what triggered you to create this? You created this white paper, 141 pages in length. How is it that you created it, and you actually refer to this as kind of a social impact project? So can you kind of explain that?
Okay, so once I understood what was going on and I saw the craziness of ICOs and stuff like that, and then a lot of people in the industry and my friends called me up and they said, Sinjin, let's do a gambling project. We are gonna like raise 80 million with your background and your knowledge. Let's do it. And I said, absolutely not. Like, this moment in time, I feel, is such a massive inflection point that I think the things that come out of this period in time could really change humanity. And so I basically told everyone who wanted to do kind of like a gaming app, like, I mean, Virtue Poker came out, they were coming out, they were raising money and stuff like that. And I looked at what they were doing, and no offense to Consensus or Virtue Poker, but online poker and gaming is difficult. You need a lot of know-how. You can't just be some technology startup person and say, "Hey, I want to do gaming." Well, unless you're Eric Forrest. I
Right.
mean, that guy's just he's just something different. Okay, he's on a different level. But in general, like if you're going to go into traditional and do something on the blockchain from gaming, I mean, you really need a lot of experience. And I thought, no, I intuitively I knew this was something so much more than that. And after 2 weeks of thinking about it, I realized I just had to look for the biggest problem possible that I thought that this could solve. And from my experience and what I was very clear on that I had a kind of idea of this could really solve was economic development in Southeast Asia and possibly the world. But I wanted to limit my scope to 630 million people instead of whatever.
Only 630 million.
Yeah, only 630 million, right? So yeah,
You really have
and
got to
whatever.
start thinking bigger, you know?
I know. So basically, I looked at a couple of things, and the first thing that popped to mind was stability. The local currencies aren't stable, and a lot of them that are somewhat stable are propped up because they have so much hard currency remittance from the United States or from Europe. But without a stable currency for these countries, I mean, we talk about like cryptocurrencies being unstable, but
They don't
we've
have to
kind of
be,
like
though.
stopped. It doesn't have to be. I mean, you have like stable coins and so on and so forth.
Right,
But
exactly.
we stopped talking about the fact that there are a lot of fiat currencies that are really unstable, right?
Right.
I mean, extreme cases you can look to like Latin America or to Africa, but even the lack of stability in Southeast Asia is a big issue. And so that was the first kind of point. And then I thought to myself, okay, let's say you solve stability, and what would that really look like? And then it came to me like, but why are they not stable in the first place? And then it came to like the biggest issue at all is that unlike Latin America and Africa, where they may have negative growth rates, Southeast Asia, especially if you look at ASEAN, the Association of Southeast Asian Nations, I think they have 10 member states. They have had 66% growth of their economies in the last 10 years on average.
Right.
Right?
Huge.
It's massive.
Growth. Yeah.
But when you go there, and I lived there on the ground for 6 years, I've been working in the region for 15 years, there's no difference to the people who are not the economic elites. They've basically been living the exact same lives for the last 15 years, other than having more access to consumer goods, right?
Right.
And why was that? And I realized that it's corruption, absolutely 100%, right? I mean, the people themselves are being exploited by the economic elites in the region, and they have been able to manage to, circumvent or utilize the political systems to their ends. And these people are not unified. And when we're talking about like unbanked, they're not even like documented in a lot of cases. And they're citizens there. It's not like in the United States where you're undocumented because you're an illegal immigrant per se, or you're an alien or whatever.
You're just
these
literally
people
undocumented.
We need to now take a small break. We're forever grateful to our corporate sponsors. The sponsor who's been with us since the launch of the Blockchain 360 podcast is the Blockchain Academy. The Blockchain Academy is a global leader in blockchain training. Their latest initiative is the 10K Blockchain Developers Training Initiative. The Blockchain Academy is seeking to train 10,000 developers on Hyperledger Fabric, Hyperledger Sawtooth, Corda, and EOS. Enterprises and developers can learn more about their comprehensive boot camps by visiting their websites at theblockchainacademy.com/10KBDI. We'll now return to our podcast.
Yeah, undocumented. They're born and raised, and they probably never left like whatever a square mile of that area, and they don't have documentation. They've never seen a doctor. They were birthed at their town. And then you go to Southeast Asia, and you even go to places like massively beautiful like cities and huge cities like Manila, Jakarta, Bangkok, and then you'll see there's like alleys and there's slums in some cases. Not so much Bangkok, but you'll see that in Jakarta, you'll see that in Manila, where you have luxury shopping malls and literally half a mile away, slums, full-on slums, where there's no electricity grid. It's been kind of like ad hoc, just kind of put in. The floors of the house are not even. Some of them are even dirt floors, right? If you can even believe that, or just like basic bare concrete. Um, and I thought, okay. And I had studied economic development in my undergraduate. I had studied it in my master's in business in Korea because, Korea, we were a non-industrialized country, and we had gone through basically, a Japanese occupation and then a Korean War right after that, right?
Right.
And so our country was totally devastated, South Korea. Um, and we were the fastest sustained developed country in the world. Like within 30 years, we were developed from like no factories and war torn to where we are right now. Right, that took about a 30-year period. So if you take any business, if you graduate with a business degree in Korea, like this is something you learn. It's part of like set curriculum. You must learn this because it's part of being Korean and working in Korea, right?
Right.
So I had known all these things, but the thing that never gets addressed is corruption, right? You talk about like World Bank or IMF or IFC, their funding arm, or USAID or ADB, and you have on the other side you have like anti-corruption kind of organizations out there, or Amnesty International. But in terms of like economic development in of itself, nobody really addresses the issue of corruption directly when it's talking about like economic development. They may talk about anti-corruption in terms of how to make businesses do better, or foreign businesses that are there, or corruption issues and how they're affecting human rights, but not for economic development directly. And the major reason for that is it's a touchy subject. It's a sovereignty issue,
Right.
right? And like let's say you're doing aid or you're doing development in any of these countries, which are like without a doubt, like no need to like you can't like sugarcoat it. They're corrupt, right? But if you were to say, look, we have to fix this corruption before we do this aid, well, then it's never going to happen because the people who are corrupt are the ones in power, and you would never even be able to even do any aid at all.
Right.
And so you do these case studies in there. You look at these countries which have been, and I have a term for it. I call it failing emerging markets, where they've been emerging markets forever and they're growing, but there's no real economic development happening across the broad sector of society. And once I thought about that, that's when I guess I started to really dive deeply into what decentralization really meant. The first time I looked at it, and I wrote this white paper 12 times over, like from start to finish. I wrote it and I evolved it and I rewrote it and I evolved it and rewrote it, and the first time I looked at it was mainly just as in a more centralized view, using a kind of decentralized currency, and kind of thinking like, okay, well, what if we made, my first thought was a reserve currency for the region, like almost a euro for Southeast
Sure.
Asia. And I'd spent like 3 months, 4 months reading about, how the euro had done and what regional currency effect was and stuff like that. And then when I realized that within about like 2 or 3 months into it, that it's not really that. Even if you were to try to instill like a monetary policy for the entire region and stuff like that, which from all the reading that I've done is just it just decreases a lot of flexibility for the countries themselves. You still have the major elephant in the room, which is corruption. And then that's when I realized that if there was a way to fight corruption, what would it be? And this is the kind of period where we're also going through the entire like Me Too movement worldwide, and it started out in the United States. And what I noticed about that movement was that, especially in a place like of Hollywood, and it's crazy because I'm making this association, but you had Hollywood, which has a very centralized power structure, and it's very hidden. And it wasn't until you had people coming out like Rose McGowan, who was saying like, okay, this guy Harry Weinstein, he's a bad guy, and you look back on a lot of like jokes, almost everyone in Hollywood, they know it, but no one actually was able to really come forward and say anything. And it's not just say anything because there were accusations against him, but get that momentum where many people are saying it at the same time. And you can almost get this kind of base layer of data and start to make a timeline. You can say, what the scenario was,
Right.
and what was actually his, modus operandi, like his MO, and how did he do it. And then you start to expose the corruption, and you start to expose who's protecting these people.
Right.
And you look at like with Larry Nasser at University of Michigan, and you look at the upper echelons of the program where you think you're reporting and you think that something's going to happen in a centralized structure, but the people who you're reporting to, even though they may have the ability to change it, they may have some hidden agenda or vested interest not to do that, and so it gets pushed aside.
Of course. Yeah.
Right? So yeah. So then you look at social media, and social media is awesome because social media is able to, basically mobilize people for a single cause right off the bat and create that awareness that, hey, something is wrong, and it starts something. But the problem with social media, it's not sustainable because you can bring forth, an issue, and then, it's up to everyone to kind of jump in and kind of see it. And a lot of the information is anecdotal, or it can be very emotional, or even social media can be used in a really wrong way. I believe in one country, I can't remember the exact country, I don't want to say it if I was wrong, but they basically started using social media to like accuse people of being like child molesters or like bad people, and then basically everyone would be like, oh, that stranger who came into our village is bad, let's kill him,
Right.
because he's a bad guy, right? Without any like background checks or whatever like that. And I realized that if you look at a lot of countries where there is a strong rule of law and there's a low corruption, one thing about it is that there's an aspect that people trust each other,
Right.
but there's also this really deep sense of accountability and transparency, right? Where everything is like up and up, like if you take a bid for a construction project, that there was like 5 bids for it. It was transparent. Who was doing it. The process, so on and so forth. And where you have a society where it's controlled by the economic elites who know the political system, and you have, whatever, 90% of the population or 80% of the population in like the low income area who are not organized, who don't know what the rules are, so on and so forth. There's no way for them to really, even start to collect this data or to make something sustain. And so this is where I got into the really deeper part there. If we created a decentralized information network that had people reporting into it and basically reporting everything about their daily lives,
Right.
then we could start to create a base layer of data, and then that could create a public mandate that people can get behind, right? And then I started going even deeper and rewrote it again because I realized, okay, let's say that they even have this public mandate and they have this information. Well, then they're not going to be taken seriously because so what? Like, okay, this is information, but the problem that they're having is that they don't have time to worry about long-term issues because they're just trying to survive. Right. And so then I realized, for every time that they, get into reporting, okay, obviously we should give them a token, but then this token, how does it have any value? Right. And so unlike a lot of people in the space, the technologists who are like, great, we've listed our coin, that's great, it's a utility token, who cares if it goes up or not, whatever. Like it's just naturally going to happen. I was really deliberate about saying, this token needs to have value. And even if it looks like it's a structured, like centralized aspect or underlying aspect of value, it still needs that because maybe the issues in North America for what cryptocurrencies are used for is about like making a trustless layer, right? In a very structured, centralized environment, or reducing the number of intermediaries, right? But in an emerging market where you're basically surviving, cryptocurrencies have, I believe, a really different role than that. It's not about taking out intermediaries. There's not even any process at all, right?
Mm-hmm.
So if we could give them a process and if we could give them a token that had value, and then I looked at how do currencies that are kind of being used in a specific way have any value, and I looked in Asia, obviously we have reserve currency funds, right? Foreign reserve currency currencies. Basically, United States and North America and Europe, you don't really think about it too much because United States is the reserve currency of the world, meaning that, you have your local currency and you're doing trade and stuff like that. But if your currency is getting weaker, the easiest thing to do is simply like hold as much foreign currency as possible, that if there's a currency attack to kind of drop your currency, you can buy it back with hard currency like the US dollar,
Correct.
right? And so it's all about having a currency reserve, right? But then I thought to myself, okay, then this currency reserve, if you have it, then how do you fund it? And you look at something like Tether, or you look at stable coins where they're pegged, and then for every dollar that comes in, you get a stable coin, or theoretically, that's what's really supposed to happen.
In theory.
And then I realized, then I looked at like something like Tamasak, which is
Hold
like
on
a
a
sovereign
sec. Hold on a
fund.
sec.
Yeah, yeah,
We have that beautiful police siren
Yeah.
behind. So for everybody's
And he's parking, telling
benefit,
the guy to stop double
you
parking.
you live in New York and you're on the Upper West Side and you're on the 7th floor, but there's no place for the sound to go anywhere else. So we get the beautiful
Yeah, exactly.
sounds of
yeah.
the city. So
Actually, I live on the Upper East.
Upper
yeah.
East Side,
Yeah.
same
So,
difference.
Yeah. So
So
yeah, same difference.
So coming back
Yeah.
here to how do you establish a value for a currency reserve or a stable coin?
Yeah.
So if I understand correctly, so the purpose of the International Blockchain Monetary Reserve is to create this ARC, which is a currency reserve coin, and you're building it in such a fashion that it becomes a stable coin. Is that correct?
A macroeconomic stablecoin. So it is correct, but our monetary policy is like a 40-year policy.
So
I believe.
So
yeah.
what we have here is now really two initiatives that you've done. One is to create an economic policy group, which is the International Blockchain Monetary Reserve, and you're
Yes.
then also creating this reserve currency. Is that correct?
That is correct.
All right,
Yeah.
good. So
All
now,
right.
can these exist separately, or is the purpose is they're supposed to be integrated and serving a single purpose and mission?
I think the best way to look at it is that the International Blockchain Monetary Reserve is issuing this ARCC token.
In
Right?
theory, you could actually issue
and
a
so-
similar token for other regions, correct?
Exactly.
Okay.
So I guess the really super long term plan happens after I'm dead.
After you're
because
dead.
just getting this just getting this done will take like a long time. And obviously the scope is humongous. I kind of joke around and I say it in interviews that my entire goal is to win the Nobel Peace Prize, but I'm kind of serious about it too, because I think the scale at which we're looking at and what we're doing, it's at that scale, and I want people to know that it is at that scale. We're not kind of trying to do something good. We're really trying to make a massive difference. I don't want to say like necessarily change, but we want to create something new that has such an impact regionally. I mean, if we were actually successful in creating, even solving a little bit of the corruption issue, even creating some currency stability with this additional, addition, creating like actual real financial inclusion. Imagine if we suddenly brought 60 or 70 million people into the middle class in Southeast Asia. That could single-handedly push world recession back 10 years, and I'm not over exaggerating that. Like people are talking like the world's going to go into recession. The US dollar has been just way overprinted. The supply, the credit's been there.
That's
The interest
never
rates constantly
happened.
been dropping. But if you actually brought an entire region like up a level in terms of like actual socioeconomic, class development, and you're looking at a region of 630 million people worldwide, that would have a massive effect, not just the effect in the
Right.
region.
Well, one of the things that
So,
you've talked
yeah.
about in this discussion is the incredible role that remittances play. So, and how it changes a developing nation, or even one that is developed. But its impact on it is dramatic. How is it going to be that the IBMR is going to find traction and legitimacy and its ARC currency reserve coin legitimacy within this environment because you're dealing with political structures as well as economic structures.
I think two things is that we're always about empowering the people, and I think that's what decentralization is all about. That in a centralized network, maybe the centralized network gets stronger and there's network effects when there's more people added onto it. But those people who add on to it, like if I give the example of Uber, they may not reap the benefits of the centralized, value or the exponential, net effects. You have like Uber drivers who come on board, and the more they come on board, the better it is for the consumer to have more access. And it's more cheaper, especially during surge pricing, and the network itself and Uber becomes more valuable. But the drivers themselves start to earn less and less and less. And I think one way would be if Uber was to give equity, if they had given equity to every driver or something like that. Maybe that would have been more equitable, but that's still to the decision of Uber. And let's say that Uber became even more profitable. Again, that doesn't necessarily mean that these drivers would still grow in profitability.
Right.
But in a decentralized network, what's really amazing and totally blows my mind that if you have a decentralized network and it actually is a real network, meaning that it's really benefiting from network effects. For me, that means that each and every node that comes on further secures the network, and by further securing the network, it's securing the value of the network because a decentralized network, by its nature, is just simply hard to maintain, right? Because it's decentralized, right? And so every new member adds to the integrity of it, and then they actually grow in value, right? Instead of detracting value away, each node actually grows further in value. And so for me, ARCC as a reserve currency, and that being the incentive to um, really create this decentralized information network, that will create value, not just on aggregated data value, but like what that data is used for is that it will be, their public verified data that if there are politicians who want to really do good for their country and can mobilize the masses, and a lot of these countries in Southeast Asia are democracies, right? Then that data could be so useful to them as a counter to what the existing environment is like. And then going back to, we're not saying like we're going to go and change politicians or we're whistleblowers or these people are bad. I mean, these people are the economics elites are just basically taking advantage of the situation that it's there. If they don't take advantage of the situation, somebody else would, or a multinational will come in and take advantage of the situation, right? It should, because the system is basically structured this way and people are
So
taking
how
advantage
does
of it, right?
how does the and I've actually made the mistake of calling it ARC because you've just made the clarification that you refer to it as the ARCC. Um, so how does the deployment of this coin actually then provide that stability? I mean, so like you discussed the networking effects. So the more participants, the greater the value is of the network. So if you
Yep.
have a bunch of people who are saying like, I'm going to convert my fiat currency into this because what I'm doing is I'm exchanging my fiat currency for this essentially a stable coin product. Um, is that what is backing it up? So you really don't almost need to have too much state sponsorship of the stable coin simply because it's just the users who are defining this, which all
Okay.
correct. So you don't.
Yes and
So the
no.
legitimacy as a reserve currency, or as not even as a reserve currency, but as a usable stable currency, it becomes a de facto situation versus a state imposed situation.
Okay. So actually, the mechanism is not that at
Okay.
all. We allow people to we will allow people to buy ARCC on secondary markets, but in actuality, the main way to mine and earn the ARCC is what we coined the social proof of work, where when they're reporting, they earn the currency for free, right? And they'll be on a platform. And this ARCC fintech platform for financial inclusion, sorry, we don't really have a really slick name for it yet, but The platform itself, when they earn the ARCC on the platform itself, they will have access to asset management services, right? So our entire intention is this, and this is the thesis behind it is we want to promote ARCC and help them have it as a micro asset. So you talk about microfinance and you have micro
Yep.
loans, right? And that's a whole big thing. And the individual who started that, he won the Nobel Peace Prize, and it's been great. And but what people don't realize is that, and there've been studies on this, and there's this one book by called Poor Economics, and they do a study on it that when you have micro loans, because the annualized uh, interest rate is like 30, 40, even 50%, and the time to pay back is like 3 months, 4 months, 8 months, that in actuality, the burden of having this loan, it looks good because capital is being deployed, but because the interest is so high, which is justified because of the risk, but the interest is so high that it's actually an added burden. And so because you have this loan and you think that the capital is being deployed is good, but in actuality, it doesn't really have a strong net effect other than creating some level of further stability. But rather, if you were to give them an asset like 2 cows and a chicken, right, instead of a loan, that actually has a much higher net economic effect, and it's a lot more sustainable because from that point on, because they have an asset that bears milk or bears eggs or something like that, they're able to build off of that. They're able to hire staff and expand. Whereas in a loan situation that's so high on an annualized basis, they're never able to scale. And so what I wanted to do after reading that book and doing the research was, put forth this idea of a micro asset. So let's say that they earn the token on the network, and they've earned it for free by basically securing the network, right? And the integrity of the information, right? And we always want people to only be able to earn ARCC on the network. Why? Because the entire model is based off this decentralized information network, and we want the incentive to be strong that you can only get ARCC through here, so that the information that we get is the best information we can get, right? And it's uploaded in real time, so on and so forth, right? But then you have this micro assets that's worth like almost nothing, right? But the fact of the matter is that since we're issuing it, there's two things that happen. Number one is that as a decentralized information network or decentralized currency, cryptocurrency, as the currency and as the network gains velocity in terms of users, in terms of usage, in terms of the amount in circulation, on the secondary market, as we've seen with a lot of cryptocurrencies, but let's say with Bitcoin specifically, the value increases, whether it's because of scarcity, whether because it's showing that it's viable.
But how are you going to eliminate
But,
the volatility? I mean, the whole idea of
we're not eliminating the volatility. We're not. See, that's the whole thing when I say macroeconomic. We look at it over a 40-year period. In our macroeconomic, in our monetary policy, the first 8 years, what we're going to do is we're just going to let it float, right? We are just going to actually. Are you familiar with poker at all? Okay, wonderful. Okay, so there's cash game poker and there's tournament poker. So in tournament poker, there's a strategy called deep stack tournament play, right? Like big stack play. And basically, the strategy is in the first couple of levels or early part of the tournament, you want to double or triple up. So you always want to have like the biggest stack at the table. And when you have such a big stack, right, you can pick and choose your spots to kind of bet in or steal blinds or so on and so forth, right? So for us, what I looked at, what like Basis was doing, and what other kind of stable coins that were using algorithmic kind of bond or other kind of type of mechanism to do something, I thought about it. And from my experience in poker and like tournament poker and also like in-game economies and stuff like that, I thought it's not possible to do what they're doing right now. The fact of the matter is, because of the nature of cryptocurrencies, the lack of liquidity, the volatility, in actuality, you need to make as big a stack as possible to kind of brute force your way into stability later on. So for the first 8 years, what we want to do is we just want to increase the reserve as big as possible, and not just the reserve, but kind of inflow of funds into the
Right.
reserve, right? And then the next stage would have been is like kind of finding your range. So basically, with this much stack or this much reserve and the inflow into the reserve, at what range of price could we defend ARCC at, right? And so the next 10 years is basically modeling, whether it's algorithmic or whether it's human or whether it's policy, to find an upper and lower range of where we could defend ARCC with using the currency reserve and the incoming
So in essence,
funds,
you're becoming a
right?
central bank.
And then, yeah, definitely. We are a central bank in terms of monetary policy.
Also, you're trying to you're
Definitely,
doing
100%.
it from what every central bank tries to do is to protect the value, manage it from a monetary standpoint, allow for expansion on the social impact, as well as providing then all the advisory components that to manage the state. I mean, but you're stateless in essence. So
Yes,
here's a question.
yes, and the governance is an issue as
So
well.
how
Yeah, go
does
ahead,
this?
please.
I mean, Facebook and their Libra coin.
Yeah,
There's similarities between them. So can you actually walk us
yeah.
through what the similarities are and what the differences are, and does this actually validate this business model?
I think Facebook coming out with Libra is the best thing for us because you can see from even this discussion, it's a very involved discussion. I mean, people have been asking me for an elevator pitch, and I'm like, okay, here's kind of the elevator pitch, and then as we get deeper down the rabbit hole, it becomes far more complicated because I'm not. This project is not creating a product. This project is creating a decentralized economic structure, and it's not easy to articulate. And with Libra coming out, I guess the biggest thing was it validated our reserve structure, right? That, yes, looking towards, having underlying assets and using those underlying assets to, have a value, and the way that they structured it was a massive validation for us because now what I've done actually for some of our other materials when we talked with other people for strategic partnerships, we have a chart that basically shows the comparison between ARCC and Libra in terms of structuring, and so it's been absolutely great. I think the difference between us and Libra is that with Libra, Facebook has a very specific application for them in that they want to apply it as a payment solution or a currency for their WhatsApp and Facebook platforms. For us, it's all about economic development. And so, and that aspect of the micro asset and also what we hope that the asset will do. So in actuality, although Libra said that Libra coin is not really stable coin, we all know that really is a stable coin. It's just that it's not pegged, and it's going to be the whatever determinative value of the fiat currencies and the securities that they hold, right? But it's very low risk stuff. Ours, on the other hand, we will have in our reserve, we'll have 50%, which would be, a basket of currencies: U.S. dollars, Swiss francs, Canadian gold, even, and BTC. But on the other hand, we have investments that we're doing in social impact, in tech, almost a VC fund, which is kind of like our alpha to the base currency. Because for us, we don't want to maintain a stable price. In the end of it, we want to increase the price of ARCC as much as possible because the larger ARCC becomes in price, the more incentive it is to the users, and also the more of a micro asset it becomes for the users themselves. That imagine that you look at a lot of charities that are using BTC a few years back, and it was great because BTC was increasing in value. But the thing about it is, with all those BTC charities, you had to buy BTC, and that was great when BTC was like $5 or $30 or even like maybe $100. But when BTC is 11,000 US, it's hard to just redistribute that. But imagine that if we could get the same kind of value proposition initially, where people are earning ARCC now, it's not worth very much. It's worth maybe whatever, a penny or even less than a penny. But 3 years from now, it's worth $1, and they've acquired all this and we have been able to basically increase the currency reserve. And the currency reserve is not really based off a central bank model per se, because we're not trying to influence the economy in terms of inflation or so on and so forth, right? In our model, we love the fiat currency of these countries. All we want to do is act like a more accessible US dollar reserve currency for these
Right.
countries, right? I mean, you look at like Cambodia, where actually, if you didn't know, their main currency for transactions is the US dollar. They actually use US dollars in cash in Cambodia, right? They only use their domestic fiat currency for purchases under $1 US in actuality, right? And so it creates the stability. But in order for it to be a micro asset, so it's meaningful that it's not just like $100, right? We need to increase the price. And so that's one major difference, is that Libra is looking to use an underlying basket of currencies and securities for a stable price, whereas we want to increase ARCC to the very maximum price, and we are looking to stability literally 18 years
Right.
out, right? So the last part of the monetary policy is that we want to get transactional, but we want to get transactional 18 years out. So in that 18-year period, we want to build ARCC's value so much so that someone who started with ARCC that earned like did 200 reporting and it ended up being like $20 ends up with $2,000 equivalent after 3 years, and is able to use that for entrepreneurial activities.
Now, your white, hang
For
on a
instance,
sec.
okay,
So your white paper
go
actually
ahead.
discusses the macroeconomic impacts of leveraging a sovereign reserve fund as a bridge to economic
Yes.
opportunities for the impoverished. Explain how this relationship stabilizes emerging economies. So while you're talking about the role of the ARCC transforming itself from asset management to a transactional type of coin,
Yes.
how is this going to work, lifting those lower rungs, those individuals who are on the lower rungs of the financial ladder? I mean, who are the losers? I mean, you've mentioned all the winners. Who are the losers in this scenario?
I don't think there are any losers in this scenario. It's not a consumer market project. It's an economic development project. In these markets, you basically have people living in the same living standards for like the last 10 years, literally, right? And we're targeting the urban working poor, meaning that, yeah, they may have housing, they may have food and so on and so forth, but they're basically they might have a nice cell phone even, right? They might be working in a call center, but they have no upward mobility whatsoever. And when they go home back to their parents, they're sleeping in their urban slum in their house, and it might not be that bad. They have four walls, a house, electricity, internet, but it's still like basically living in a slum. Um, the winners basically are when you have an emerging market and then you get to a point where you're a developed market where you have a middle class. I think everyone wins. I think the economic elites, if they have these monopolies and they end up getting toppled because there are more consumers who are more aware, they already have a massive head start. They already own most of the private infrastructure. They can end up actually earning more and becoming even bigger world-class companies because they have a bigger market to attend to. So our objective here really is to say, look, all this development work that's been happening in emerging markets hasn't worked because of corruption and the fact that the local markets are not empowered and there's no middle class. We're just trying to bring people up to the point where they get out of being an emerging market.
Right.
That's it. But that's a big play as well, right? This is not a commercial play. This is a macroeconomic play. But in part of that is that it's got to be practical. It's got to be feasible, right? So what ends up happening is that once you have a middle class and it's established, maybe the value of ARCC as this kind of appreciating micro asset won't be able to sustain its growth. If you look at even BTC now, you had gains of whatever 300% up to from its inception to like when it was like
Right.
$1,000 or whatever, right? And then you look at from 1,000 to 12, thousand, or what the last one it was like 20 times, right? And then now you're looking at, if you look at 3,500 as the base, and then maybe we get to like 25,000 now, right? And you're looking at 7 times. So if BTC actually gets to 100K, it's not going to be this continual like 15 times, 20 times returns in increases. It will start to go from 300 to 30 to 15 to 7 to 3 to 2 times to 1.5. So it inevitably, face Bitcoin, whether it tops out at $1 million or $60,000, it will inevitably plateau in its pricing, right? And there's reasons for that, and maybe they will still keep increasing because of the supply is a fixed supply.
Is there a fixed supply
But we assume
with
that's
ARCC?
there is a
What
fixed
is that
supply.
amount?
So we mint. The amount is basically we do 20% new mint for the first 18 years, and then a 5% new mint for the next 22 years, and then
what's
that's
the
it.
what's the
And then the supply
starting
stops.
supply?
The starting supply is still really being calculated, but what we have right now for in the white paper and what we've kind of revised it to, I'll just give you what the revision is right now. I'm just going to pop it up. We want to initially mint about 2 million tokens to start, but the total mint that we would like to have, to start, we'd like to have about 90 million tokens to start with. And then at the end of the entire minting process, we look at something like 64 billion our ARCC tokens after 40 years. But to give you a reference, people might think that's a lot, and we're talking about 40 years. The MY supply of money, of like actually circulating money in the US, of the US dollar worldwide is like 3.7 trillion, right? And that's not including saving accounts or securities or right. So in actuality, I mean, if you compare to Bitcoin, yeah, 64 billion, it's a lot, but compared to like a regional like currency that would be eventually used for transactions, 64 billion really isn't that much. And then we've basically said it like that. And one major issue that comes to mind is that, as always, like probably the last biggest issue that I did in writing the white paper was governance. And so basically what we've done for governance is that we've set out our monetary policy as clearly as possible, and we've set out certain monetary policy milestones. And then when we hit those milestones, there will be a monetary policy council of between 150 to 300 people, which we will initially nominate, and they will have like a 10-year membership, right? And they will be totally separate from the management of IBMR, and they will be able to vote whether or not that monetary policy has been sufficiently met to either pass and make a change or to strike it down, right? And this will all be super transparent. And the results of the Monetary Policy Council will be binding to IBMR to enact, because it will be written in the actual corporate
So
bylaws.
here's a question. So
right?
we have this social impact project that has part of it, the social proof of work in terms of how to earn it. You've just described this construct for balancing what the IBMR is doing in terms of a monetary policy, as well as I guess even social policy as it relates to it. But how are you creating metrics to determine that you're actually achieving the goals of the IBMR?
Oh, absolutely. So number one is that inherently, because we reckon that after about 8 months to a year and a half after we launch, I'm so sorry, that's the door. Honey. Okay, we'll just wait. It's just the door.
I'm marking the time here so we can take it out.
Eric, can you just call them, tell them? Okay, they've stopped. I hope they don't call back. Okay, super. Okay, So,
What's the
what
question?
was the last question?
Metrics.
Metric. Yes. So what's great about our system is that it's basically tracking. We're asking them to basically track. Originally, we asked them to just basically track what we thought was like visible signs of corruption or lack of means, like broken light or whatever like that. But we've gone and we've understood that because these people who are living as urban working poor, which compose like 30 to 50% of these urban populations, they basically live their entire lives and their day in acts of corruption or affected by corruption, whether it's like a 3 hour commute because there's not a lack of public transportation system, or whether they got how many times they got robbed. And that's a thing, like I'm not even kidding. Like almost half of my staff, when I had 36 programmers and staff, more than half had been robbed in that last year going to and
Wow.
through work, right? And like you look at these Manila and like the entire population of Manila in terms of metropolis is something crazy. It's like over like 15 million people, right? And so people are commuting from way far away, especially coming into the CBD, which is way above their income level to have a place anywhere nearby. Like some of my staff are commuting like 2.5 hours every single day, right? And the traffic was just brutal, and the electricities and cartels and stuff like that. But there's also like everything that their lives are going through, like how many times their children get sick, like what they're eating, their commute
So quality
times,
of life
how much did they pay
metrics.
for their, yeah. And so basically we will know whether things are working because the metrics will change, we'll see that actually happening, over periods of years. And again, we're not launching a product here. I mean, it's so crazy because when I envisioned this, I knew what I was getting into, and I'm 43, right? And so when I hand out my business card, I'm not like handing it out and saying like I'm the managing director, like wow, look at me, I'm so good. I'm kind of embarrassed because the dream and the scope and the vision for it is so big, and I'm handing out these cards that say International Monetary Blockchain Reserve, and people are looking at me like, what is this, right? And it's really a play on not the Federal Reserve, but really the International Monetary Fund, right? I mean, that's the kind of scale where I looked at this opportunity and this potential as where IMF is like kind of top down, that we would be like bottom up, and the scale of that. And so basically, when we were able to get all this data and aggregate it, and our system that we've spec'd out isn't making it so that it's like Facebook where it keeps track on individuals. Once they've reported and the token has been passed to them, then the link towards the reporting it's deleted, right? And so all the information other than what qualifies them in the first place to do the reporting and the voting, in terms of like their demographic, whatever like that, to slot them in the right kind of demographic, it's separated, right? And so once we have this aggregated data for these regions and for this demographic, we will 100% know how successful we are or not. And then there will be really the bigger, very visual cues where you have political leaders who are saying and referring back to these public mandates, and even if they're making big PR campaigns and out of it and saying, look, we have finally a new like subway line here, or we've constructed, and the budget hasn't disappeared, and so on and so forth. These are all big major wins. And I think also the morale of the people feeling that, look, it's no longer about survival, but yeah, we do have a future. And going back to remittance, and this is the biggest thing, is that I think when we are doing really well, there will be less remittance because people will come back. For me, the biggest heartbreak and the biggest fallacy, I think, in these emerging markets is that people are like, look at us, we're doing remittance, it's so good. And fintech companies are like, we're enabling remittance to be cheaper. But in actuality, remittance is a really brutal thing. If you go as a maid, or you go as an engineer, or you go as a technician, and you're going abroad because you're married and you want to support your family, and if you go for 1 or 2 years, that's great. I mean, I know among the G7 countries, there's like this kind of travel abroad work plan that if you're under 30, you can go to Australia or Canada or US or Europe and work for a couple of years and get experience, and it's great. And that's great, right? But that's for life experience and learning. But what if it's like 5, 10, even 15 years apart from your family, right? That's brutal. There's a brutal human cost to remittance. And for me, when there's a country with lots of remittance, it means the country's fucked up, honestly, straight up, right? And so when we can solve the remittance issue, where not solving the remittance issue, if we can make the country good enough that those people who are educated in their own country could find a job that actually could pay without the risk of them being robbed or feel like they're getting ripped off, or the opportunity abroad is not as good as the opportunity here, then we've really done our job. And so maybe a country will say, hey, look, our remittance is going down. It's a bad thing. No, I don't think so. I think if a country's remittance goes down, it's a good thing because it shows that the country is actually doing a lot better.
Right.
And that's what we want to do. And the one thing I didn't touch upon was that the main play here is this. The end game play is this, right? If we get down to a transactional currency, that's great. And that's like after 18 years. But in that process, as we make ARCC grow in its value as a monetary policy and as a stronger incentive, we will also open up our investments and our funds to the platform so they can co-invest with us without any risk at all. And so we are basically providing them asset management services for their ARCC that they earn in the network itself. Other things that we want to do is that we've spec'd out for is community staking. So something like Kickstarter, but basically for community projects. So people would stake their coins to say, hey, I'm going to stake this many coins for this particular project just to bring it up, right? And this is how many coins I would donate if it goes through. And then people vote with their staking as well. And it gets approved, right? And then basically we put them on a kind of we put them on a Kickstarter program through strategic partners where we basically oversee the development and we match the funds for community projects, which people have used.
So this is really, really great. So I want to try to focus on a few other things while we have time, and that is tell me about some of the executives that are working with you, and what are they bringing to the table as part of what you're doing at the IBMR?
Yep. Okay, so our head of media and marketing in IR, his name is Eric Tao, and he was the youngest commercial film director in Canada when he was younger. We're of the same age because we actually went to school together in Canada when we were in middle school. And he's been a New Yorker for the last 18 years. He's married here, and he worked for Google Innovation Labs. And so he's come on board as an executive to handle the media, the messaging, and also look at the data and see how we can best disseminate it, in the future. The other co-founder is Stanley K. Kwok. His family was quite a wealthy family during the 1970s and 80s. They were one of the largest textile families in the world, actually. So he has so much experience in investments and also regionally in terms of large scale investments and projects and infrastructure. And as the co-founder, he is the one that has brought in his own family office. That it's a second generation family office that with his close friends and associates that they've come in and they've fully supported this project. So this project is completely self-funded. It's funded from my own personal exit money, or we would say like my family office money here, and it's co-funded by Stanley and his family office as well. And their family office is a $2.5 billion second generation family office. And one of the other people as our advisor is Conroy Cheng. And he's the eldest grandson of the largest gold retailer company in the world. They own the New World Hotel chain, and I believe the Carlyle Hotels as well, but they're like a multi-billion-dollar corporation. And so they have also brought in their resources for their group. So we have another person as our advisor. His name is Morgan Potter, and he was the he actually started global equities ETF for Macquarie. and the family group has an investment with him for high frequency trading for emerging market ETFs, and they do very well. They do about 1.2 to 2.1 depending on volatility month. And so Morgan is coming on as an advisor for managing the currency reserve. And especially in this like ICO kind of crypto space, you have a lot of people from Goldman Sachs, Morgan Stanley, JP Morgan, whatever. But if you really know about finance, you would know that they give out like vice presidency, director titles like candy, right? It's just the nature of it. But the people who are on our advisory board and the executives ourselves, like myself, we're like not senior. We're basically at the top of our industries that have come into this. And it's a massive difference. I mean, you look at the advisors that we have, and we have some other ones coming on, but we have another advisor who just came on, Mary DeSouza, and she was the managing director for GE Capital in one of her divisions. I mean, she was the top of her division, right? And so we have all the people who are coming on as advisors. And the biggest thing with all the advisors are, they're not coming in for any compensation. I mean, we might give them a stipend later, but there is none. And I've had people come up to me, yeah, you're going to do this. I'm a really big influencer, but I want 10%. I'll be like, you know what? Have you read the white paper? And they're like, it's too long. I'm like, we're not going to have this discussion, right? Yeah, all our advisors, they have no fees, right? None of the executives take salary. The raise, 90% is going to the currency reserve structure, and 10% is going towards development and administration, and we only take a performance fee, which is like a typical like fund fee of like 20%, but that 20% is all in ARCC. So if the ARCC has no value, then it has no value to us as well. But we're all super senior, and this is more than anything else a strong legacy play. I mean, you look at George Soros, you look at philanthropists, and they say, we've made money here, we're going to donate it somewhere else. And like we haven't really touched upon social impact, but social impact for the most part has been these projects where we've made profit and then we're going to donate to charity in our field, right? Which is like any company could do that. You could be Exxon or you could be Shell, and you can say we're a social impact company now because we donate to charity. But I think real social impact is like when the actual act of production is socially good, right? And I think that's what we have here. I mean, the act of earning ARCC creates this social transparency. The ARCC itself as a model for, as a micro asset, and as that grows, we want them to use that for entrepreneurship and as a micro asset, and even the fees that we receive from the network. So the ultimate fintech play here, if we're talking just pure business, the ultimate business play here for our project as a product is that this becomes the largest micro asset management network in the world. So like I want 90 million people on this network all across Southeast Asia, and being able to hit that target of like 2,000 US. And I think one innovation that we have that we've recently specced out, and I love it, is an entrepreneurial lottery. So what that is basically, in order to kind of gamify the network or whatever like that, people will be able to use their ARCC of what they have earned to enter into a lottery. And some of the prizes will also obviously be they win more ARCC, right? But the biggest prize that happens will be those funds will be used not to be given to them as just cash, but we will use it to actually build them a business. It will be used as an entrepreneurial jackpot. So let's say that you win it on the network, and you've won 50,000 equivalent to ARCC, right? Then our entire goal is that we would then work with a local development partner and actually build you a business with that money. Not just like, here's a house or whatever, buying a car, and here's a Lambo, and let's take pictures and selfies and do shit like that.
So a couple questions. Honestly. When does the token launch occur?
Okay, so we're very lucky. We just signed on with a major crypto partner who's very established in the field. I can't say who it is now yet because we haven't signed the contract, but we are looking to do something, announce our final launch schedule by the end of July at the latest, and to do the launch by thereabouts, like either the mid of August or late August
Okay.
at very much the
So,
latest.
for all you listeners out there, links are going to be in the show notes. But for those of you who are maybe listening on your phone, you can get more information about the IBMR at ibmr.io. And at that site, you can also see and download the white paper. You can read more about what they're doing with the ARCC, as well as answering some of the basic questions and how they're going to use the allocations from the token launch and how it's going to be distributed. Sinjin, I want to thank you very much for being a part of the Blockchain 360 and sharing with us this incredible story about not only your life, but this incredible effort that you're trying to create from a social impact standpoint, because it seems to be, as you've said, something that it will be a life's work rather than just something that you're working on for the next 3 or 4 years. I don't know what else to say. I mean, I'm sure you could go on for hours for talking about this.
No, unfortunately, yes. I mean, yeah, Brian, thank you so much. And I think that your questions and direction have been great. And yeah, I could end up going for hours. I mean, the original, like, I think I could have written the white paper to like 250 pages, because sometimes I'm like meeting with the advisor and they say, well, did you think about this? I'm like, yes. And they go, can you explain it more? I go, here it is in the white paper. And they're like, it's a sentence. I'm like, yes, that's all I could put in, because if I wanted to expand it, I mean, like, here we go. And then we end up talking for like a half an hour and they're like, okay, so you have really thought about it, you have planned it out. Yeah, if you had added in the white paper, it would have added like another like 10 pages. And I'm like, yes.
The Blockchain 360 podcast is produced weekly. Have a question? Want us to interview someone specific? Wish to hear about a particular topic? Let us know. You can email me at bryant.nielsen@blockchain360.co or tweet us on Twitter at blockchain360 or at our website blockchain360.co.